Great. Good morning, good afternoon, good evening to everyone that is joining us today. My name is Michael Filighera, and I just have to say that it is such a wonderful thing, the way the scheduling turned out for today. Rich Friesen and I have worked together for many, many years, and we spent a great deal of time working together on mind muscles. And we worked very much together on developing a lot of things to help traders with mindset. And so when I went back and was just reviewing the schedule of presenters for today, and I saw Rich's name, and I'm right after him, I'm like, oh, wow, this is incredible, because my subject for today, also, following along with psychology and discipline and other things, is mindset. And so a little bit of background on me first. As Richard did start to say, I entered into the world of exchange trading in 1979, and it was here in San Francisco, which is where I still live, on the Pacific Exchange, which Richard showed, which, by the way, in one of the pictures, is if somebody had their face, I'm in the background, but their hand goes right across my face, so all you could see is my eye and my hair. So I thought that was really great, because those were pictures of the trading pits at the Pacific Exchange. And of course, for me, that just brings back some really, really good memories, and also some more difficult memories along the way as well. So I've traded here in the United States on the Pacific. I've traded on the London Traded Options Market, the European Options Exchange in Amsterdam. And then while I lived in Amsterdam, I got my first taste of all electronic trading when I traded via the Deutsche Terminbörse, which is the German exchange, the DTB. And I came back to the US in 97, went back to the Pacific Exchange, and just kind of picked up where I left off. And then, but about 2000, 2001, the whole exchange or the way things were trading, particularly options, started to move more and more to electronic. So the necessity for a trading floor diminished. And we found that we had many, many people that were just leaving. And there wasn't enough business on the floor anymore to really sustain, a seat and everything else. So I left, and I set up in my home and continued to trade options until about 2013, 2014. Then I decided I would venture out and I'd become a day trader. And then I turned my focus to the NASDAQ, to the NQ, and to the S&P. And shortly thereafter, started my relationship with David Kosmeter, who produced weekly shows, and which I mentioned yesterday because we did a show together, that he started in 2014, I believe in August, and the week after, so the second week, I was a guest on the show, and we've been doing them ever since. So together we've been doing shows for 10 years. Now, one of the things that I also do is that I have been an Elliott Wave analyst. And I studied Elliott Wave and picked it up in 1988 and 1989. And my teachers were Robert Prechter and Dan Ascani. Now, some of you may know those names. So over the years, I've really have continued to use Elliott to give me directional insight, so to speak. And the basis for Elliott, now I must add, because it's very important, Elliott Wave is not anything fundamental. It is how R.N. Elliott really built the whole thesis, the whole principle, was that he was notating human behavior, so to speak, and their reactions to a market, their reactions to news, not necessarily the news itself. So Elliott Wave all the way along has never really been anything that's going to tell you about fundamentals or its predictive nature really is there, but it's not there because it just can't tell you, okay, well, we're going to predict what NVIDIA's earnings are going to be, what Apple's earnings are going to be, how the S&P is going to react. We recognize patterns, and those patterns are produced by the human emotional reactions to the market. So following those patterns, they end up repeating consistently, constantly, every single day. So whether you and what Elliott then did is that he started to copy down the price of the index, and he got it off a ticker tape every hour. So he started by building an hourly chart, and then he started bringing in other data. So his premise is that markets will move in an impulse fashion, whether that be up or down, and those will be counted as 1, 2, 3, 4, 5. And then a corrective pattern is an ABC, and that'll be counted as ABC. It's a three-way pattern. And that what happens is, it's not a very good example here, but what happens is that the market ends up repeating those patterns. So that once you get the first 5 up or down, and then you get a corrective ABC three-wave pattern, then that is what he would consider a complete move. And normally what it is, we go by degree. So when we're talking about very small, your degree is going to be very small. But I consider Elliott Wave our building blocks, because the patterns repeat over and over and over again, and they build a degree, they build a 5-wave move on a cycle basis, which takes a great deal of time. So that enough about that, because I'm really not going to be talking about Elliott Wave today. I'm kind of getting my charts up, so because we need to be kind of looking at something besides a blank screen. What I really do want to talk about today is the mindset. And we all have had our strings, I believe, of success, where either by luck or just by good trading or whatever the situation might be, we will have a really winning period or a really great winning trade and make a great deal of money. And mindset comes in so many different ways. But Rich was talking about it, and we're breaking it down. So together in his work, and then us, and then there was a think group that we met, and we worked together. And we really were working on the money mindset. And out of all that came Rich's really great book. And I know that I'm going to recommend it again. It's a compelling read, but you just have to really go through and just understand everything that's going on. Because a lot of times people say, what's the point, this and that. But it is a compelling read. And if you do get the companion, I just want to share with you the 3-chair exercise is an incredible exercise, and it's extremely insightful in terms of what your attitude towards your adversary, your mental adversary, may be. And then you're going to get connections on maybe areas that you can really kind of go. So we have a mindset, then we can break that down to a money mindset, then we can break that down to a trading mindset. And that's kind of where I want to focus today, on what kind of comes in. So Richard mentioned at one part that we all will have blocks that'll stand up like a monolith, from 2001, and just like we just hit our head against it. We can't seem to get past the block. And a lot of that could be from family, from our childhood. And what kind of can happen out of that is we start producing self-sabotage. Why? Because we believe the narrative that's playing in our head. We believe what maybe had been pounded into our head in childhood, positive or negative. The mind and our brains will believe that to be true. until we can take a look and decide, no, that's not true. That's not who I am. How can I make this change? And then, of course, you go through the other processes, which Rich goes into detail about and in his presentation today. But when we're considering the mindset, um, here's a simple exercise. So first of all, we need to have the mindset because we need to have an understanding. It's like, are we of the correct mind today at the opening of a market, or when we decide to step in and trade? Are we going to be able to do this without interference? So how can we kind of determine, because there's all different ways that we can get that interference mentally, which will throw us off and take away our focus of a market. Now, mind you that I often am trading, and let me just see if I can, I'm going to change my screen, guys. So give me one quick second, because I want to go over and go to this screen, which is actually showing, there you go. This is my trading screen. So this is where I'm going to come. As you can see, before I was actually showing you an hourly chart. Well, on this one, that's a 2-minute, here's a 1-minute, and that's my trading screen. So I'm trading off of this screen, and I trade because of signals that I may get, because of an Elliott wave count that I have, because of candlestick patterns. So I have all of my input that I need to get into. But now I want to just share with you the possibility of what could be happening when our mindset goes astray. So we developed a very simple exercise that I still recommend that people do each morning before they sit down to trade. And we called it the SET score. And what essentially stands for is you're taking a look at, before you ever sit down to, put your mouse on and take a trade, you're taking a look at your sensations, your emotions, and your thoughts. And you end up scoring each one of those individually. So you're going to develop an SET score. This is going to be very helpful if you allow it. So in a sense, you're going and you're taking a look at your sensations. What is your body feeling? Is it tingly? Are you nervous? Do you have butterflies? Do you have a headache? Do you have an ache, a muscle ache? Are you just not feeling well? Maybe you got a touch of the flu. Maybe you've got allergies. Maybe whatever the situation might be. Those are sensations that your body is giving you. And you can ignore them, but you're most of the time, you might be doing it at your own peril. So paying attention to them and then scoring them on a scale of -5 to 0 to +5. So and honesty here is going to be extremely important as well. So you put that through and you look at it and you determine, okay, yeah, I got a lot of aches and pains. I got this going on. And so I'm going to give that a -3. And you write that down. Then you go on to the next one. You're looking at your emotions. And those can be important because, hey, maybe you had an argument with your spouse. Maybe you had an argument with your boss. Maybe you had an argument waiting in line at the grocery store. Whatever the situation is, there was something that maybe ticked you off. You were driving somewhere and you got cut off, and then somebody, banged the back of your car. Whatever the situation is, that creates an emotion. And maybe the emotion is anger. Maybe the emotion is sadness. Maybe the emotion is whatever that emotion may be. Understand that it will have an effect on your decision process and how you're going to react to trading. So you score that -5 to 0 to +5, and you write that down. And the last one is your thoughts. Now, this one's really important because maybe, as Richard was talking about a great deal, it was the thoughts that come into our head so many times, not only when we're trading, but in his case, they came at him in the middle of the night. And it was like, oh, you're only worth this, or you're only that, or you're only this. So thoughts can also be just triggers of an old voice, an old tape telling you about your capability, telling you about your intelligence, telling you about your skill, telling you about everything, positively and negatively. So you want to take a careful look at that. What could possibly interfere with your trading today? That's the whole purpose that we're taking this look at. So you again score that -5 to 0 to +5. Then you take the three, combine them, and divide by 3. That is your SET score. If you're coming in negative or overly positive, you get to make a decision. Overly positive is a setup, by the way. I just got to tell you, it's a setup. If he's like, well, I was +5 on everything. So, I got a +5 score. And it's like, really? That's a setup. As I believe, if you really just having a super bad morning or a bad day, and you're coming in at -5 as your combined total, right? It's about 15 divided by 3, so you're -5. Well, you get to make a choice. Do I trade today or do I not? And I have to be honest with you, most times that decision can be the best decision you make. Now, we got our mindset together. We have an idea of, before we ever push the button for the first time, where are we and what is going on. So we now kind of go, and so we want to be prepared. So we're being prepared. We got all of our emotional thoughts and all of that. We've checked in on that. Now, are we just mentally prepared for what the market may or may not want to toss out at us? Well, for this one, I talk about something that is so simple, but that most people don't do. And I have, and I teach these as well. So 3 trade rules. Do you have your trade rules or a trade plan? A lot of people just kind of blow that off. It's like, but no, I'm going to tell you how this is a very, very important part of being successful, as having a plan on how you're going to get there. And your plan is almost daily. You have a daily trade plan or just a path that you want to take. Now, my trade plan consists of basically 3 rules. So I call them my trading rules. The first one is knowing what your signal is. Now, your signal could be that it breaks above or below this particular little trend line, which signifies that if it breaks above, the market should continue to go up. If it breaks below, maybe we'll get a downtrend. But then we also I have all these moving averages. They're clustered together right now. The 200's way down here. If it gets above these and can manage to stay above them, then we should get a little bit of a rally. And so now, because you're trying to determine, do I buy it? Do I sell it? What do I do here? So if your choice is you're deciding how you want to get into a trade, you're likely going to say, if it comes back down here and holds, I may try a long. Okay, great. So now you've got your point of entry. And you've got why you're going to do it. The second rule is, well, what's the goal of the trade? Well, if I'm going to get, well, let's just say we don't know this part yet, and you're going to get down and you're going to get long. Well, where do you think this trade's going to go? Oh, I think should at least go above that high at 48, but my goal would be to get it at 52, right? Because you're looking for the possibility it can get above 52.75. So you get long here at 45, and you're looking to get out at 52. So now you have both, right? You've got your entry, you've got the reason why, you've got your goal of the trade. So you can put that exit out there. You can put your sell, if you're buying it, you can put your sell order out into the market. Here's the third one. And this is the one that I know more traders that say, yeah, I've got a mental stop in. Really? Okay. So it's, where will you get out of this trade if the trade becomes invalidated for this moment? So what you thought was going to happen doesn't. So where you want to get out of the trade? Now, a lot of people say, oh, I got the mental stop. Okay, so I'm long here, right? And look what's happening. Okay, now this trade is going against me. Well, wait. It'll come back. It'll come back. Oh, yeah, look, there it goes. There it goes. It's coming back up. It will come back. It will come back. And what happens if it doesn't? And you don't have a stop in. Rich alluded to this during his presentation. And what's happening is you're suddenly down $200. Then you're suddenly down $300, and you're still hoping that it's going to turn around. It's going to turn around. I see buyers coming in. It's going to turn around. Now you're down $500. Maybe then you're down $750. And some people go like, well, I'll add to the trade. Okay, now instead of one, you got two. Or from five, you got 10. And in a futures market like the NASDAQ, which is $20 a point, $5 a tick, this index doesn't move in ticks, folks. The NASDAQ index moves in dollars. So it's $20 per point per contract. So you could be down $500 or $600 very quickly, right? Say, for example, I got long at 45. Now it's trading at 35. That's $10. That's going to be $200 per contract that you're out. So it can go against you very, very quickly. And you're still thinking, oh, it's going to turn, it's going to turn, it's going to turn. Then you finally get out because you can't stand it anymore. And now what happened? You fool, you idiot, you this, you that. Oh man, look what you did. Now I got to go try to make this money back. Now I'm afraid to trade. So essentially, by not following your rules, which is the last one, which is where will you get out if the trade becomes invalidated? Notice I didn't say where the trade proves you wrong, because that's normally what's now going to happen. You take a hit in the market, and what do we do to ourselves? Well, you fool, you idiot, you were stupid, you should have gotten out, you should have done this, you could have done that. You've got all the negative stuff that's going to pile in on top of you. And now what's happening? The trade actually stopped, and now you got another opportunity, or you had an opportunity to get out, and maybe if it was going to continue to go down, you get to ride it. This is just a very choppy market. So, but you see, if you got out, you get to refocus on what's happening in the market. And say, for example, you got out at $175 or $200, much easier to make back than it is to make back 500 or 1,000. Much easier. 500 or 1,000 starts to play mind games with you. If you stick to your rules, it keeps you in the focus of what the market is actually doing. And maybe you're going to see, it's like, okay, that was just a silly little chop, but okay, I see what they did. I'm going to get back in because it did held here. It got into a supply zone and it held it, and now they're all just triggering and they're going to take it up. And so maybe you got in again, but at a lower level. Because you got a signal here, you got another signal here, and you got another signal here. And another one actually right there. So maybe you got in any of those levels. And you see, if you got back in, you're back in the money. So keeping your mindset open and ready and being prepared is so important. Having trade rules. And again, your trade rules are going to be different than my trade rules because all kinds of factors go in. What are the number of contracts that you trade with? What are you comfortable with? What is your profit goal? And then you can take it steps further. Because there are people that say, oh, I never limit myself on how much I can make in a day. Well, I've seen a lot of people that they have a great morning. They make 500, they even make $1,000, and then they decide to keep trading, and they lose the $1,000, end up down $1,000. And there's several reasons for that. Again, most of it is not following your trade rules. So I just kind of want to just put this together and say that respecting your mindset, respecting where you are, what you are feeling, and I mean respecting what you are feeling physically, mentally, before you start to trade is going to give you great insight about what you are getting ready to do. I will be dead honest with you guys that there have been mornings when I knew better than to pull that trigger. There have been times when I'll go into the market and I'll start, it goes against me, I'll start adding to it. Now, again, my risk profile is going to be a lot greater than your risk profile. And a lot of it has to do with like, well, what size is your account? And it's like, that's important and you need to respect that. But I think more important that if I'm doing that and I'm building into a bigger loss, I'm self-sabotaging myself. I'm looking at this whole situation and I'll tell you what's taken over. Anger. Anger. So dealing with a mindset, you have to understand what could derail you. Well, and they're all emotions. And if you have an understanding of Elliott Wave, right, that it's all based on emotions, those moves are produced by emotions. But if we're looking at these little tiny moves, well, what are the emotions here? This is probably mostly just because they're buying particular issues. And so, it's having an understanding. Yeah. Sorry, I don't want to go too far away from that without giving a background. So what we're going to be adding to our mindset, so if we can keep our focus on where it needs to be, and we are aware of our own self-sabotage tools, might be different. So let me just kind of go over a few of them that are important. Anger. You get angry at the market. You get angry at yourself. You get angry at whomever. What's it do? It absolutely takes your focus away from what the market is doing. Now you're angry that the market is going against you. You take it personally. Then we have another one that a lot of people suffer from: fear and doubt. So we see that there are people that make a lot of money trading and are like, I can do that. So they get an account, or they sign up with one of these funding firms, Apex, Top Step Trader, One Up Trader, et cetera. There are so many out there now, and you're going to try to get a funded account. And that's all fair and good. But guess what? Now you got to deal with, before you ever press it, oh, I'm a little uncomfortable going in and trading. Well, what's going to happen? Okay, so I doubt my own skill. I have fear that I'm going to lose. I have fear that I'm going to miss out. You see a turn and you're like, oh, where do I get in? How do I do this? And then you jump in and that was the end of the move, and they turn it and they bring it back down, or they take it back up. So all of these other emotional reactions, mindset, so many of those can be eliminated by taking a look at where you're at before you ever start to trade on that particular day and that morning. Having an idea, it's like, yeah, I'm a little bit upset, I'm a little bit this. Good. Those are good things to notate. Either you're going to put them aside and focus, or if you will then become aware of, if one of them. Now, I had a little bit of an argument with my spouse, and then suddenly you're looking and going like, do I take that trade? Do I take that trade? And suddenly you hear your spouse's voice. And what's your reaction? I'm mad at you. Boom, you just broke your mindset. Boom, you just broke your focus. So even during the day, as we're going through this, we still can make a choice. But if we are under pressure, we must perform. We must perform because I need to make money. I have bills. I've got this. Now we're going back to, what's your conversation with money? So I'm so glad that Richard came before me today, because one segues into the other and segues back. And I guarantee you that you start to feel like, oh, come on, this is just like, like being told that you need to go to a counselor. I don't believe in counseling. Well, counseling is not anything that's going to be for the counselor or anybody else. It's actually for us. But first thing we have to admit, it's like, well, I am vulnerable to my own emotions. It doesn't make us right. It doesn't make us wrong. It doesn't make us weak. It doesn't make us strong. It just is. So one thing we that I learned a long time ago is there's stages, and Richard started to mention some of them. And again, you get so limited in what you're able to do. But when your mindset gets broken, you need to get moved back to what we consider and call agency. And the only way you can get back to the agency, which is where you actually can get back to doing what you do, because you have to get past a lot of bumps to get to that, what we call agency. That's where the work can get done. So, but what you really need to kind of move past to get there is you must have acceptance. If you had a bad trade, the only way it's going to stay there and not hound you is to accept it, not belittle yourself, not to tell yourself you're an idiot, not to go like, you fool, look what you did, blah, 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 blah. Because I want to tell you, 10 to 1, that's an old tape. There's somebody else in your life that always put you down. There's somebody else that never gave you that support. There's somebody, whatever. And trust me, we all are products of where we came from. That doesn't mean that that has to control who we are and where we're going today. Now, that's more my muscles work. So My Muscles Academy, it truly has multifaceted things that are addressing issues that I've never found anybody that is just issue free. And let me just say, I have been trading for over 40 years. I have had tremendous success, but I've also had big, big hits. And, the biggest hit that I ever took was on the day after the first Gulf War started. And if those of us that are old enough, we can go back there. And if we were actually trading, we can go back there. The build up to that war was going to be like, oh, this is not going to be good, and the market's just going to sink. The market's just going to go down, go down, go down, go down. And it didn't. The war started, the US went in, did the whole invasion trip, bombed a bunch of stuff, and Iraq didn't respond. They did nothing. The market, starting in Tokyo, soared. Didn't go down, it soared and went in the other direction. Well, I had somebody trading for me. And one day, 675,000 gone. Now, the account was big enough to hold it and to handle it, but still, what do you think that could do to your mindset? Not only just that day when you have to get with it and trade, but just period. Just, yes, those were big dollars. Yes. And actually it was in Amsterdam, so it was in guilders. So that's the currency that we traded. That's the Dutch currency. It was the Dutch currency. But the equivalent in dollars at the time would have been about like 500,000, or even up there. And you're right, that's big money. And so again, what I'm just trying to bring about is there's going to be a lot of situations where all of the tools that you need, you already have. You just have to hone them. You just have to kind of work them a little bit, and you have to be able to admit that being this or being that affects how I trade. It really does. And so one other thing is, like, we work on our mindset, so we even have our mindset all set and all together. Then I have another one. It's like being prepared ahead of your trade. So again, then you're going to honor. I only have three rules, right? I just said, and I think they're so simple and applicable by everyone. And it's just like, just follow the rules, your own rules, and know what your entry, what's your trigger, what is going to trigger you into that long or that short. I want to take the position. Know what your goal on that trade is. So again, if you're a swing trader, even better. You better have that trade planned out before you enter it, because you're going to want to have, that's my entry, here's my exit, which you can put in the market, and here's my stop, and you can put that in the market. Now you get to just sit back and more calmly let it either come or go. It's when we don't that we start to doubt ourselves. Then we're like, well, maybe I shouldn't have bought it there. Well, obviously you didn't have a reason as to why you were buying it there. So you see what I'm saying? It's like when you get those your three rules, and you start wavering on one of them, it's because you didn't have it to begin with. And if you're trading and you're a swing trader, you may make adjustments to that strategy, but you have a stop already in place. What is the maximum that you're willing to risk on that trade? And again, if you're using good risk reward, which is another topic that I want to bring up, I think many traders don't get the idea of risk reward. And so, and Richard brought this up a little bit, but I think it really deserves a stronger part of a conversation. People say, oh, 2 to 1, or they want 3 to 1, or they want, it's like, oh yeah, that's all great. But how do you want to employ that? How do you want to actually use that? So if I'm entering a trade and I'm seeing I just got triggered into a short, then I automatically have to have that. What's the goal of the trade? How much do I want to make on this trade? And say you want to make $200. Okay, perfect. Nice goal. How much are you willing to risk? I have seen people say, well, I'll risk 300 to make 200. Really? That's not a good combination. So why wouldn't you, if you want to make two, your stop's at 100. You only, that's 2 to 1. And so hard to keep. So maybe, I want to make 200, I'll risk 175 if you have to. Okay. But you got to stand firm. This is my other thing. You really cannot go beyond, because then as soon as you do that, you're not prepared because you just took it away. You are changing behind your trade instead of ahead of your trade. You're changing what it is you're going to do, and you're taking yourself out of the mindset. So what you're now doing is you're not watching your market to see what it is doing. You're worried about your P&L. And that's another thing that traders tend to do. They're focused on the P&L. And what happens when you really focus on the P&L? Well, many times people sell it before they should, or buy it back, if you're short. So instead of letting their winners run, they take profit way too quick. Why? Well, because they got real nervous. Maybe it didn't go really in my favor right away. Maybe it came real close to my stop, and then it's coming back. It's like, well, I don't know what's going to happen. Or I don't know. And they get out. It's the I don't know part that's going to sabotage you, because you have that stop in place and you've got your other side in place. If you're looking at the market going like, okay, maybe it's not going to do that, but you can adjust your stop and your target. Instead of just kind of like, I'm out of the trade and then watch it go in your direction. Or taking your stop out and watching it go through your stop and keep going. So damage can be done unnecessarily. Sticking to your rules, honoring your rules, honoring yourself is going to help build good habit and then help you deal with maybe any other issues. Because again, I want to just also talk to you that, self-sabotage is just can be really difficult. And because there's a lot of things that we as human beings and individuals have to admit. And sometimes it's like the only person you really have to admit it to is yourself. And so when we fall prey to our own self-sabotage, or when we fall prey to our doubt and our fear, whatever else is coming in, the quicker we can get to acceptance that it happened, that's what I did, I can move on. That becomes acceptance. Now you can work in what we call agency to make the money back, move on to the next trade, look at what else you can do. You get to make additional choices instead of spending all that time driving yourself or raking yourself over the hot coals. We can be so self-destructive that we become extremely frustrated. And I honestly can tell you that during the pandemic and after the pandemic, there have been a lot of people that they want to make change. They want to see change. And a lot of financial things have come to become binding for people. And so now their fear of loss is becoming overwhelming. So how do we get into the right mindset is not only to trade, but even to make a decision that this is something we want to do. We all watch the stuff on YouTube. We all, listen to people that are selling their stuff. Follow my method and that's the road to riches. But I think each one of us needs to find that path through designing our trade rules, honoring them and sticking to them and building. Yes, you're going to hear where people was like, they happen to be in a position and had an account big enough where they could trade Tesla before it did its 20-to-1 split. So back then, Tesla was trading at $2,500 or $2,000 and not at, 180. So if you happen to trade those options back then, well, you could buy an option. The stock went up $500. You made money. You made a lot of money. But it's not the same. It's a different world now. If you were there and you made that money, great. But making adjustments to the environment of trading is also important. And understanding, again, do what I just said, the SET score, the exercise. If you kind of really give yourself 5 minutes each morning before you start to trade, you may find that to be very beneficial. And if you're consistently coming up like, oh, maybe I shouldn't trade because I'm a -3, oh, I'm a -4, I'm always negative. Bam, pay attention to that. Then maybe you should find a coach. And there are trading coaches. And trust me, I'm one. I do provide coaching services. And part of that is like teaching. So I might be teaching you different things like Elliot. I might be teaching you how I day trade. I might be teaching you, different skills that you can use. But the one thing that I always turn around and focus on is how did you feel? How did you feel when you took that hit? How did you feel after you had a successful quick trade? What were the voices in your head telling you? And it will amaze you if you're able to get them and notate them. and do that consistently. It's going to help you develop what's going on between your ears and how that affects you. If you've got a pressing, I've got taxes due, I've got a utility bill due, I've got my house payment due, I've got my car payment, and column A, which is my bank checking account balance, and column B, which is the bills need to get paid, are not equal. In fact, they're not even close to being equal. Well, stepping into trade with that kind of pressure, because obviously either you got to go put money into an account, and maybe that's money you don't have, or maybe it's money you put on a credit card. I don't know. But mindset, it was going to be really hard to work with when you've set it up with all kinds of negative things to begin with. So how do I just kind of put this all together? As you know, again, I'm so pleased that I came right after Richard today, because we truly have known each other for, oh my God, yeah, before. I remember when he first came to the floor. And trust me, all the things he said, yep, that's kind of the way he was perceived. But I will tell you, I watched him form that firm that he founded. I watched him on the traders that he trained. And there's one guy that I remember very clearly. And I was amazed at the calm, the precision, and nothing upset him. And here I am standing in the crowd going like, oh, this guy's ticking me off. And this person's like, what are they talking about? Blah, blah, blah. And Tyson, that was the trader's name, would stand in the crowd as if nothing was penetrating his ears. Only his focus was totally on his trading. And he was consistently successful. Consistently. And we were standing in a pit of people that could be anywhere from 15 to 30 to 40 to 50 people shouting all day long. So you got a lot of stuff that you got to deal with. And now, of course, I'm the only one shouting now. Not every day, but often, I might get a little angry with the market and I let some stuff out. But having a clean understanding of the psychology. Now, Richard talked about how, he brought in a hypnotherapist. And part of the 3-chair exercise, if you get a chance, folks, I had the good fortune of doing that exercise. We had a group, and the night that we were going over that particular concept, I volunteered myself to be what we call it, to take the hot seat. And it was the best thing I have ever done. I will tell you that. That exercise gets you in touch with your adversary. And your adversary might be money. It's how do you feel about money? What is your battle with money? And if there's a lot of regret, if there's a lot of anger, if there's a lot of just junk surrounding money, and your goal is to step into a market and make money, you might just have hit the ticket and why you're not being successful. And so I just recommend it. I recommend it. And if you could actually get with Richard, let him do that 3-chair exercise together with you. It's really incredible. I want to leave time if there are any questions. If not, I'm just kind of going to go over these markets a little bit, because they're wild, woolly, and crazy, and providing a lot of confusion. But first of all, I just would say that I also, I have, first of all, I have a trade room, but I also have, I do daily updates via YouTube. And within those updates, I'm basically talking about what I feel that the Elliott wave pattern is. And I have my longer term count, my short term count, and I'm reviewing those. And then what could upset the apple cart? And unfortunately, we kind of are living in a little bit of an upside down world at the moment. And it seems that there are a lot of additional things that are coming in and being introduced as trading tools, or just like different options, different indexes, different ETFs, and that are being started, and they're getting a lot of money invested in them. So my first thing that I want to tell you guys, there is still a very, very, very large amount of money circulating in these markets, and I'm just talking about the United States. So if we have to go globally, it's like, wow. But in the United States, just do nominal values for the number of contracts traded in the future and the number of things that happen here, and you will see how much money is floating back and forth within the S&P, within the Dow, within the NASDAQ, within the Russell, within Apple, within Google, within Tesla, all these different stocks. And now you need to also put together, there are many, many changes to how things trade. And there's been many changes onto what do we consider a derivative and what do we consider the underlying. This one, in my mind, is the most important, because one of the things that has changed very dramatically, like right now, what I'm seeing as they're hitting all the bids and they're driving the market lower, all that market is doing is they're monetizing options that are going to expire today. I can go back and look it up and basically show you, it's like, oh, this is what they're doing. And they come down into, as you can see on this chart right here, they're coming down into a supply. See how big that is? So underneath all of this, if they break it or if they hold it, watch how they go ding, 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 ding. They broke it because they want to go down to the next one. So, but now look. And now they went down, they triggered an order that were down there, which they sell it till they get themselves triggered, and now they're buyers. I see this happen all the time. It has nothing about being bullish or bearish. Absolutely nothing. It has everything to do with what's trading. What are the flows? The money flows, the options flows. Then we have what we call, and if you guys are option traders, we have the Greeks, Delta, Gamma, Theta, Vega, and they've added to them Rho, Vanna, and it just keeps growing. Now people say, oh, come on, that's just too much to really take in. It's like, you're right, it is. But understanding that I was an options market maker. I stood on a trading floor, and that's what I did. I provided a market for the buyer or the seller, whoever came in. My obligation to the exchange was to make a bid and offer. And so in doing that, what has changed is that the options were considered the derivatives. Well, right now, I believe that the options are the underlying, and the stocks and those ETFs and the indexes are the derivatives, because it's the option trading. It's the way the options are getting pushed into back and forth that is dictating what's happening in the underlying, and which is dictating what's happening in the index. Take it one step further. Volatility. We all know the VIX, right? We have the VIX. We can look at it. We can follow it. Right now, it is down 7 cents. Not really too active today. Why? Because tomorrow is a VIX expiration. So now we've increased our expirations from once a month, right? That's all we had. Once a month is when the options expired. And they had different cycles, but once a month, that was it. It's now every day. We have the introduction and now the huge market. zero DTE options. That's 0 days to expiration. So sure, I can. And so I will give you first. I'm just giving somebody my, that's my email address. And if you're looking on YouTube, here is the larger file. And if you go in and you look for Traders Helping Traders, then look for my name, because there's other people that have taken that. We own the name, but there are other people that have taken that. So always check for my name. And I have two channels actually, and they actually they present the same thing. One, I have 14 and a half thousand subscribers, and the other one I think is 1,500. So combined, quite a bit of subscribers. So what I want to just kind of just sum this up with real quickly is that how we trade and what we trade and how it affects the movement in our market can often give the wrong signal. So it's not a matter of, oh, gee, they're coming in and they're buying Apple, they must be bullish. Oh, gee, they're coming in and they're buying this, they must be bullish, or they're selling that, they must be bearish. There's nothing to do with bullish or bearish anymore. This is what I'm finding. What it has to do with is the options flow. What it has to do with what's going on in volatility. There's ways that volatility can be suppressed, right? They're holding it down. Right. So what is one of the biggest things that big ETF managers and money managers that are doing? They might sell the VIX, and I mean sell the VIX as an index. It's a cash index. If you sell the VIX, you're going to get a pile of cash. And they take that money then, these are money managers, and then they go and they buy the volatility of the underlying stocks. And it's almost a self-fulfilling prophecy, right? Because they think the market's going to go up. So they get some money and they go in and they buy the calls. I, as the dealer, the market maker, I have to sell you those calls. Premium, name of the game, right? So there's premium. Thank you very much. There's premium. And so that's the name of the game. And so I'm going to sell you the premium. And then I have to hedge it. And I have to buy the underlying. Or I have to buy the index. So they coming in to buy that volatility because it's going to go up. Self-fulfilling prophecy. So again, is it because the market has suddenly gotten bullish and we think that the world is glorious? No, not at all. The world is still the world. The problems are still the problems. And many are unresolved. We don't know how it's going to come out. We don't know how things are going to be affected. We have to wait. But in the meantime, we're like, wow, what was this? What was this big sell you guys just did? What was that all about? You know what we used to tell people on the floor? More sellers than buyers. But there's a lot more to it. It's like dropping a market to monetize something that expires later today. So maybe in the Qs, maybe in one of the ETFs, which is in this case could be, you know, the triple Q, the SQ, the TQs. Maybe it's a setup for the volatility expiration, which happens on tomorrow on the opening. Right. So it's when you step into the trading things, there's so many different things that you kind of got to go with and just have an understanding. You don't have to totally say I'm an expert at it, but have an understanding of what it's doing to your market. So, and a lot of that is, it could be very, very confusing because we're talking about gamma, we're talking about Vanna, which is nothing more than what happens to the delta of my position if there's an increase in volatility. And so there's stuff that people go like, well, wait a minute, I don't want to do all that. I just want to trade the future and make $100 a day. Good idea. I like it. I can help you do that. I'm going to finish it up right there. I really appreciate you guys listening today. I hope I've added to a little bit to what our trading mind needs before we actually go to it. And thank you, David. As always, my pleasure to make this presentation today. And so I am going to turn it back over to you.